Everybody is talking about the Rajesh Exports case, but I think most people are missing the real lesson because this story is not really about fraud. It's about what investors choose to focus on. Rajesh Exports wasn't some unknown company. It was one of India's largest gold companies. A well known name, LIC was a major shareholder. Everything looked normal. Then, one simple question started changing the story. According to SEBI's interim order, between financial year 2021 and financial year 2025, Rajesh Exports allegedly overstated revenues by around 15.5 lakh crores. The company has denied the allegations and the investigation is still ongoing. Now let's understand what the allegation actually is. Rajesh Exports owned Valcambi, a Swiss gold refinery. Now, in a refining business, customers bring gold, the refinery processes it, purifies it, and earns a refining fee. Simple. But SEBI alleges that transactions were accounted for in a way that caused the entire value of the gold to be reflected as revenue. Now, if your business earns a small refining fee on a valuable asset, but the full value starts showing up as a revenue, sales can suddenly look enormous. And this is where things become interesting. Now, for years, investors looked at the revenue. Very few asked a different question: how much money is actually being made? Because despite these gigantic sales numbers, net profit margins were hovering only around 1%. Now, low margins alone don't prove any wrongdoing, but they should make you curious, especially when investors are celebrating the revenue number. The most fascinating part: this wasn't uncovered by a hedge fund. It wasn't some AI model. A shareholder reportedly started asking questions, comparing disclosures, looking at subsidiary numbers, and eventually the regulator started digging deeper. Now let's talk about the LIC angle. A lot of people are saying LIC invested थी तो safe कैसे नहीं था? Wrong question. The real question is, why did investors stop asking questions once they saw LIC's name? Institutional ownership is not a due diligence, it's not a guarantee, and it should never replace independent thinking. Now, where does the company stand today? The shares are still trading, the company is not delisted, SEBI has passed an interim order, the company has denied the allegations, and the investigation continues. But the market has already reacted, and the shares are tanking 5% daily with lower circuit. Because trust, once lost, is very difficult to rebuild. So, what's the lesson? Don't confuse revenue with business quality. If you don't understand how a company makes money, you don't understand the company. And when a company looks too good, don't just read the presentation, read the annual report. Because the question that mattered here was surprisingly simple. Sales इतनी बड़ी है, profit इतना छोटा क्यों है? And in investing, the quality of your questions is often more important than the quality of your stock tips.